Yep, I'm here, Celia. I can take it.
Okay. All right. Thanks.
Cool. Let me bring up my screen here for everyone. All right. Thank you, everybody, for taking just a few minutes to talk about HSAs. Still very an exciting thing. As you well know, during open enrollment is the only time that you can switch plans from the traditional plan to the HSA qualified plan. So if you're thinking that it was a mistake that you didn't jump into it last year, now is your opportunity. Remember, a health savings account does go along with that specific health save plan that's offered, the higher deductible plan. And so once you are enrolled in that, you're eligible to open up a health savings account. Remember, an HSA is a tax-advantaged account that you own as an employee of RMD. The money that's put in there, both the money that's put in by RMD and any money you put in through payroll, is yours to keep for the rest of your life. So HSAs allow you to be able to build health savings in a type of plan or account. With a traditional plan, if you get the traditional plan and open up an FSA, that's a great way to use tax-free money, but it doesn't allow you to save up year over year for future expenses. With an HSA, you're able to put away the same tax-free money because you're not paying Utah state income tax or federal income taxes on the dollars you put in your HSA. And then at the end of the year, if it was a healthy year and you didn't have to access any of those funds, or you only accessed part of those funds, whatever balance is in there rolls to the next year and continues to roll over year over year over year until you need to access those dollars. So you even have access to your HSA when you retire. So if you think you may have some medical expenses in future years or when you retire, an HSA is a great way to put dollars away to plan for those expenses. Most all of us will have some medical expenses in our life. If we happen to be lucky enough that throughout our working career we're fairly healthy and we don't go to the doctor very much, we don't take very many medications, then by having an HSA, we can put those monies away. And then when we retire, towards the end of our life, we may have some medical expenses at that point, and we can use tax-free money to spend on that. If I didn't have an HSA in retirement, then I'd have to pull money out of my 401k or IRA and pay tax on those dollars, because any income that I pull out of those accounts, I'm going to have to pay income tax on, and then I'm going to use that for my medical expenses. So again, an HSA is a great way to save for your retirement. If you end up being healthy all the way through retirement and you have extra money in your HSA, you can pull it out after the age of 65 and use it for regular income. You would not have a penalty anymore on it for using it for something other than medical, but there is income tax that would be applied at that point. So let's say I did really well, I was pretty healthy, and I had $150,000 saved up in my HSA. I retired, and 10 years into my retirement, I'm still really healthy. I've got lots of money. I don't want to just have it, go to some of my family members when I die, and so I want to pull some of it out and buy a car or put some money down on a condo or buy some property somewhere or whatever it may be. I can pull those dollars out, and I'm just going to apply it to my income at that point in my life, whatever tax bracket I'm in retirement. I'm going to pay the income taxes on that. If I continue to use it for medical expenses, so when I go to the doctor, when I go to the hospital, when I pick up medications and cover those expenses, I never pay any tax on it or any penalties. So again, the money that goes in right now while you're working is there for you to use this year or next year or in future years. So very much a great opportunity, and now is the time that you could choose to switch over to that plan if you did not choose to switch it last year. Also, if for those of you who maybe jumped into the high deductible plan with an HSA last year and decided that wasn't for you, during open enrollment is the time you can switch back to a traditional plan as well. Any monies that you put in your HSA are still yours to keep and use. You'd never lose those dollars. You get to keep them in your account and use them for those qualified medical expenses. If you want to contribute to your HSA, you can also choose how much you want to put in, and you actually can change that dollar amount anytime you need to throughout the year. So if I might move to the next slide here, I'm going to tell you what you can see that slide now. So the new HSA limit for next year has increased a little bit. It's $3,600 if you're covered by single coverage, $7,200 if you have anyone else in the plan. So that would include single parent, couple coverage, or a family of 10. So the IRS max for that is $7,200. And then both this year and next year, and if you've reached 55 during the tax year or are past 55, you can contribute an additional $1,000 to either of those numbers. And that catch-up contribution is based on the account holder. So if you're 54 and your spouse is 55 and the HSA is in your name, you still have to wait another year before you can put that catch-up contribution in. But again, these dollars are going in pre-tax, and whatever funds you put in, also keep in mind the money that RMD is giving you, because that does also go towards this total amount. So if you can contribute this money and don't spend any of it, all of it rolls over to the next year. And if you continue to do that year over year, you're going to be able to build up that health savings account pretty quickly. If you have to access some of those dollars, then that's what it's there for. You can use it for those medical expenses. And if you have to access all of it, then that's why it's there to help you meet your deductible and meet those out-of-pocket expenses you have for your insurance. Again, an HSA is a great thing for you to have. For those of you who have one now, it's an opportunity for you to continue to save and think about investing it. For those of you who don't have one yet, it's an opportunity for you to think about, would this year be the year for me to jump into the high deductible plan and look at that HSA and start funding that and getting the money that RMD also contributes to it? Like I said, now is the time to make that decision. And if you want to put money in, you can start off with whatever amount you think could work. And if you need to update that throughout the year, you can just go over to your benefits team, to HR, and make that change at that point. So that's all I wanted to cover today. Are there any questions before we turn the time over to Celia for the FSA portion?
I did not have any questions that came in the chat. I did want to thank you for helping us understand the value of having an HSA account as part of our future financial planning, as well as using it now. In our discussions with Team Nash and surrounding insurance, we feel like probably the high deductible plans will continue to make healthcare coverage affordable in the future, and having an HSA account to cover that higher deductible and that higher out-of-pocket maximum is crucial to making those plans beneficial. And so that's kind of what we've done with our match this year, is made it to encourage people to take advantage of the match that RMD is given, but also to put some of their money in so that they can build that HSA up and have that nest egg kind of to cover the out-of-pocket and the deductibles and the out-of-pocket maximums that are associated with the HSA accounts or with the high deductible accounts. So thank you very much.
Perfect. Thank you, Sarah.
Yeah, did anyone else have a question on HSAs? All right, well, you can put it in the chat if you want. And Celia, we'll let you finish this up with the FSA.
Okay, so I was just given these slides on the FSA, and I'm not going to go through all of them because there were quite a few of them. I'll skip through some of them, and if there are specific questions, then let me know. But I know a lot of people are really familiar with the FSA. There were some good points that she said about the FSA. One is that, for dependent care, keep in mind on the dependent care, the things to keep in mind is that it's only for children under the age of 13. The dependent must live with you. And if you're married, your spouse must be work or be a full-time student. So there is criteria for the dependent care. Under the FSA, the limits remain the same as last year. That has not changed, as well as the dependent care. So you'll see that when you go through open enrollment that you have the option to continue again in FSA and dependent care. And I mentioned this before, is that by compliance, you can't, like RMD cannot assume what you want to elect going forward. They have to get your election. So if you do want to contribute to an FSA, make sure you go into Employee Navigator, make that election. I was able to confirm that the hearing aids are not covered under a limited benefit or hearing services. The only thing that's covered under a limited benefit FSA is your dental or vision expenses. iSolved, which used to be Infinisource, they're probably one of the top companies for administration for FSA. They just have some really neat tools. So keep in mind, getting reimbursed off the expense happens. You don't have to prove that you actually paid anything. They just need to have the receipt. You can submit it online. You can submit it through a mobile app, and then you can receive a check in the mail or direct deposit with just, within days. So I'd encourage people to set up that direct deposit if they have that, if they're comfortable with it, because the money is automatically deposited into their paycheck. And then for the reimbursement on the FSA, the easiest thing to do is for any kind of thing that's medical, is submit a copy of the explanation of benefits. If not, like you're going to get, let's just say you do decide you need to get some dental services, then you do need to submit the reimbursement form. If this is assuming that you have not submitted using your debit card, because of course you can just use your debit card to pay for the service. But they will eventually ask for, under the FSA, they do ask for proof. And so keep those receipts, and then they're going to want to see those receipts just to make sure that they're all in compliance. Under the HSA, they don't ask for the proof. They just recommend you keep the receipts, but they'll never come back and say, hey, prove that this was really a qualified medical expense. There are some yeah.
Can I say one thing about that also? On the
Yes.
FSA, if you use your debit card and you get a request to provide that documentation, please submit it, because otherwise we have to put that as income to you. You'll be taxed on it on your W-2 form. So
Good point.
I'm getting emails from Infinisource every month about some of our participants who still need to provide documentation for services that have been paid for, and that will become taxable to you if you can't provide the receipts. So I'm sure that you'll have the receipts, so get them sent in so you don't have to pay tax on that.
Good point. All right, so over-the-counter medications, I'll go back, they used to not be, what was covered, and then they changed some regulations so it's not covered, but they are covering some over-the-counter services. And so like bandages, splints, contact lens, if you submit those, they will cover those. But these kind of things that they'll only cover these certain conditions if you have a doctor's prescription. So instead of your doctor writing a prescription, say for, I'm just trying to think of something that there's several allergy medicine that's over the counter now. You can use your FSA for that, but you need the doctor write a prescription that says, I want you to take Claritin. Then it will be covered under the FSA. Dependent care, same thing. You're going to need the documentation on the dependent care. This is just, again, reminding you, save your itemized receipts. You can use your card at the time of service. However, if you don't have your debit card, don't worry, you can reimburse yourself. And it's an easy process to get that done. And anytime you guys have any, questions or concerns or help with trying to get reimbursed, please call our office. Myself, Akshay, also is really good about helping people getting their claims reimbursed for the FSA. And let's see, we all know they will pay for the copays. It pays for things, what they say is qualified medical expenses. So it's pretty much most medical expenses. It doesn't cover for cosmetic things, but there's a lot of things that they do cover. And then they will let you know on here, these are just the receipts by letter. They'll ask you to send in the receipts 15 days. They're going to send a second letter 30 days. They'll send another letter. And then if you don't respond, they will deactivate your card, because they really need to get the receipts. That's part of the requirement of administering of FSAs. They need the receipts. So this is just talking about the debit card, the advantage of it. Keep in mind you have the use it or lose it. So you do have a $500 rollover. And what that means is if you haven't used, $500 or less of your FSA election for the year, that will be rolled over to the next year. So you will not lose that. So if anybody has any amount over 500, I'd recommend them go out and make sure you get that spent. If you have to do some over the counter and get a doctor's prescription for that, just so you can at least get it down below that 500, and then you're safe. It does the rollover. As Sarah mentioned, on an FSA, you cannot change, or maybe it was Scott, that you cannot change your FSA election in the year unless you have a life event, and like marriage, birth, adoption, divorce, but it has to be made within 30 days. So let's just say you get a divorce, you drop a dependent off your insurance, you want to change your FSA election, you can do that. So that is a quick rundown of the FSA, because I know this is a long meeting and I wanted to get it done in time. 7 o'clock, so we did it.